Solana is one of the fastest blockchains at theoretically 65,000 TPS. And we know that there's a decent quality team, there's a decent amount of people building on it. It's a real thing. But Jump Trading have been building a second validator for the network, which looks like it's going to be producing between 600,000 and 1.2 million TPS.
Wow.
So it kind of dwarfs the scale of what blockchain can be used for.
Well, that's impressive.
Yeah, and so that's interesting because if we think about, more use cases, well, it's a chain that is that fast and that cheap. Okay, that gets used for all sorts of different stuff. So it's very interesting. So that's something people should look out for. Again, people should keep an open mind. The idea is here we're trying to make money and not an ideology.
Well said.
And so, that's something that's on my radar screen firmly. It sounds like it will be in testnet the end of this year and in mainnet by summer of next year.
Wow.
That's a complete step change for the industry. There's a lot of noise online from people who haven't been in the financial systems, like BlackRock's going to own all of the Bitcoins. It's not. It's a client-driven thing. It's a fund.
Right.
And you buy a share of the fund and that gives you your access to Bitcoin. It's not like they front run you into all of this stuff. But how I think about it is we've got two worlds out there, TradFi, crypto.
Mm-hmm.
And the ETF is probably, I think of these as I think of the crypto world as like a digital nation state. And what we're building is a trade agreement. So you can get direct investment from the TradFi world into the crypto world. So these are kind of trade agreements. This one, the spot ETF, and that allows money to come into the system, which the system desperately needs right now because the crypto economy has not been growing. Yes, we might be in crypto spring, so it's come off the lows, but the economy's slow. We can see it everywhere. The activity is not great right now. So what you need is some new investment. And that's what this does. It's a trade agreement between TradFi and crypto, but it doesn't mean that anybody's going to actually do the trade. They need to, just because we've got an ETF, just because Larry wants to sell it to his customers, doesn't mean the customers want to buy it yet. I think it's exactly where it would be after you've just gone through winter and it's a bit of spring. So if you think of what spring is like, one day's raining, one day's sunny, one day, it's a bit meh, And so there's plenty of stuff going on. Activity's relatively slow because NFT market, which is a big part of ETH, is in its bear market because it's an asset and it lags the ETH economy, like houses lag the US stock market, stuff like that. So it's relatively slow, but still it is the broadest based and deepest economy of all of them.
Yeah.
So for me, it's just like, yeah, fine. New stuff will come, new opportunities will arise. Yeah, I mean, it's been quite a long winter, although, most of the space bottomed in October last year. ETH bottomed in June. So that's almost a year since the bottom was in.
Mm-hmm.
Well, it is a year since the bottom was in. So I actually think of these as 1 year down cycles, 3 year up cycles, with the first year and a half being kind of spring-like, and then we go into summer, and then we go into fall. So that all lies ahead for me. And it just feels that we just need a bit of liquidity to come into financial markets. We need any trigger. Maybe one of the banks struggles and the Fed has to do something. Maybe the Fed decide that, yields are getting too high now. We'll need to cap them with yield curve control. Or maybe they just see inflation falling fast and they start cutting rates. But all of that feels like it's coming into play and the crypto market will start sniffing it out early. So if I look at most of the larger blockchains, they all have some underlying economic value being transacted. There's transmission, transfer payments, transmissions, all of that kind of stuff in XRP. There's been lots of things from DeFi to NFTs coming out of ETH. Bitcoin is its own thing, the store of value narrative, et cetera, et cetera. So we see that it's just not broken out to the big application.
Right.
Don't forget, when I got into this space was 2012, I said, well, the financial system's going to go on blockchain rails. Here we are 11 years later, we're still not there. We're just starting, right?
Yes.
But yes,
Yeah.
it is going to go there. We see all the banks talking about it. They're all working on, they've got huge blockchain teams to figure out. And I was with some people last night here in Miami. It's like the other issue is, well, if JP Morgan uses one blockchain, let's say they use XRP, and Goldman uses ETH, my view on this bull market that lies ahead whenever it comes is it's more of an everything, everywhere, all at once bull market. Because it's my belief that a lot of people have been working on tokenization of real world assets, so
Yes.
the financial system. We've seen a lot of people experimenting with what we can do with NFTs. There's some big breakthroughs like Solana can create 1 million NFTs for $100. Okay, well that means we can do ticketing. You're from the music industry. Why is that not all? Why did the tickets that we stick in a drawer to prove that we went to an amazing concert 20 years ago? Why is that not an NFT? Of course it should be.
Yeah.
And what can we do with that? Hotel rooms, all of that stuff. So we've got that with DeFi. DeFi is probably going to split between KYC, AML, DeFi, because the institutions want to get involved, but they can't because of regulatory problems. And then there'll be non-versions of that. And then we're seeing a lot of brands and other people coming into the space and sports teams and that kind of stuff. So I think all of this plays out in the kind of 2 or 3 years ahead. So Franklin Templeton have a tokenized money market fund. Somebody else has done a tokenized money market fund. The European Investment Bank did a tokenized bond issuance. They're all experimenting. They're all doing it.
And
so
that's on ETH, I believe, right?
That one was on ETH, yeah. But they're doing it on lots of different chains.
Right.
So we're seeing a lot of experimentation going on, which is great. I think there's, the Brits will have their pound stablecoin. The Europeans will have their euro. The Singapore will have their Singapore dollar. Then the US dollar itself, which is the main payment system for the world, I don't think the UK or somebody will be allowed to do that because it's not their currency. And that's where stablecoins come in. So stablecoins are basically a tokenized version or a fractionalized version of the Eurodollar market, which is a confusing name. But the Eurodollar market is back in the 70s, the US had come away from the gold standard and they wanted to protect themselves because they're like, we don't really know. We've got the world's reserve currency, but these are all new free floating currencies. So they basically had capital controls on money going out of the system. And they also had lending controls. So they said, listen, until we kind of figure out this new world, we don't want you lending out to all these foreign entities who now want dollars because before it's pegged to the gold. Anyway, so the Brits developed a market called the Eurodollar market, which is an offshore market for dollars, fed by these international banks that can get hold of dollars and then lend them to others.